And what's this? One more little quickie for the end. ZeroHedge.com, you know it. Insider selling soars in cautionary sign to the market. Well, you know what they say when the insiders start selling? They think we may have peaked. 1 month ago, when Apple finally crossed above $1 trillion in market cap, Goldman's chief equity strategist, David Costin, said that investors had been focusing on the wrong $1 trillion question, adding that the correct question was, what amount of buyback will companies authorize in 2018? The reason was that according to the latest estimate from Goldman's buyback desk, stock buyback authorizations in 2018 had increased to a record $1 trillion, a result of tax reform and strong cash flow growth, a 46% rise from last year. That's pretty darn massive, if I don't mind saying so myself. The upward revision was warranted. According to Trim Tab's calculations, buyback announcements swelled to a record $436.6 billion in the second quarter, smashing the previous record of $242 billion set just 1 quarter earlier in quarter one. Combined, this meant that buybacks in the first half totaled a ridiculous $680 billion, which annualized amounted to a staggering $1.35 trillion, indicating that Goldman's revised estimate may in fact be conservative. Based on the Goldman data and estimates, it's probably safe to say that August was one of the all-time record months in terms of buyback activity. That companies would be scrambling to repurchase their stock last month was not lost on one particular group of investors, the corporate insiders of the companies buying back their own stocks. According to data compiled by Trim Tabs, insider selling reached 450 million daily in August, dollars that is. The highest level this year. On a monthly basis, insiders sold more than 10 billion of their stock, the most of any month this year, in near the most on record. One cautionary sign for U.S. stocks is that corporate insiders have accelerated their selling of U.S. equities, said Winston Chua? Chewbacca? What is that? Chua? An analyst at Trim Tabs. They've dedicated record amounts of shareholder money to buybacks, but aren't doing the same with their own, which suggests that the companies aren't buying stocks because they're cheap. Finally, as we noted yesterday, the September selling may have started early this year in an ominous sign for the rest of the month. It's already been a tough start to the month of September for the S&P 500, which has fallen for the 4th day in a row. This is notable, as LPL Financial notes, going back to the Great Depression, only 2 times did it start down the first 4 days. That was in 1987 and 2001. Some pretty interesting dates there, isn't it? Anyways, I guess I don't have too much to worry about because I'm not in the stock market, but I am in cryptos. I do have my silver still, and as you've seen, cryptos got a little hit with the ugly stick here the last day or so. But still early in the month. Let's go, baby. October, November, December. We're tired of waiting. Take care.